Hi, hello. Earlier, we used to run a series called Fund Facts in our Tamil channel. It was quite popular, and in between, I stopped it. Now, a lot of subscribers started asking for it. Could you please start doing it again? That's why I started. And in the second series, the first fund that we are going to see is HSBC Midcap Fund. As you all know, this earlier HSBC mutual fund was separate and L&T mutual fund was separate. L&T mutual fund, when it got sold, HSBC mutual fund bought it. So since then, HSBC mutual fund has become much larger than what it was before. The data that we have taken is as on 24 July 2026, and the investment horizon that one should consider for this fund is at least 7 years, since it is from mid-cap category, and the date on which the values were taken, Sensex was 76,060 and Nifty was 23,767. The fund category, as you all know, is equity mid-cap. So the investment style of this particular fund, the portfolio construction approach is given in front of you. Stable, they go for stable leaders, high growths, and then thematic and turnarounds and cyclicals. So that is the kind of portfolio approach, HSBC Midcap Fund takes, and also they talk much about their 4Q: quality of business, quality of management, quality of earnings, and quantum of earnings. So these are all the 4Qs which this fund also follows. Quality of business, as we all know, the scalability of the business, the competitive advantage, market share, longevity, pricing power, brand strength, all those things. And when quality of management comes, track record of the management, corporate governance, promoter background, how efficiently they allocate capital, all those things the fund considers while choosing the stock. Similarly, quality of earnings, consistency in earnings, the fund manager looks for consistency in earnings, capital intensity, as well as the cash flow. Quantum of earnings, how strong the growth in earnings is, that's what the fund manager looks for. So this is the broad philosophy the fund follows, and it has been quite successful in following these philosophies. So looking into the portfolio, when the fund was started, it was started in 2004 on August 9, and currently the fund is managing more than 15,000 crores, 50 to be exact, 15,352 crores. And the NAV of the fund, in 2004, if one had bought at 10 rupees, today the same NAV is at 448.28. This is as on 24 July 2026. So it has multiplied more than 44 times. And risk level, of course, is higher than Nifty 50 since it's a mid-cap category. And the fund manager is Chinu Gupta. Expense ratio is 1.45% for regular plans. The value research rating as well as Morningstar rating both stands at 4-star. Now coming to the number of stocks and portfolio details. So the number of stocks in the portfolio is 81. Total in mid-cap universe there are 150 stocks. So within that they have chosen 81, not entirely into mid-cap. Some stocks are from small cap and some stocks are from large cap. The portfolio PE ratio is at 44.38. It is on the higher side. They are having more of high quality portfolio or high growth stocks. That's why the PE ratio is on the higher side. The average market capitalization of the stocks that they hold is about 62,000 crores and odd. And funds beta is slightly higher than the index, 1.04. Funds alpha is superior at 5.7%. Generally this is taken on the past 3 years. So in the past 3 years, the fund has given 5.7% more than the benchmark. Turnover at 126%. This turnover of the portfolio at 126% is slightly higher than what we would like. This could be because of many reasons. One is, of course, buying and selling, and if there is lot of fund inflow, also new fund arrival also increases the portfolio turnover ratio. These are the reasons. Then how about buying the fund for retail investors? The minimum investment to enter is 5,000 rupees. Subsequently, top up you can do with 1,000 rupees. Minimum SIP amount is at 500 rupees. And how about the exit load? Exit load you have to pay 1% for those units in excess of 10% if you happen to withdraw within a year. Generally, we are talking about 7 years and the investment horizon. So there is no question of withdrawing before a year. Of course, until and unless there is an emergency. Okay, how about the portfolio composition? Equity is at 98.95%, debt 0, and cash levels about a percentage. So they are fully invested into equity at all times. Now let us look at the SIP returns. Everyone wants to look at the SIP returns and bulk returns. That's why we are investing in a fund. So how this fund has performed? If one had invested 10,000 rupees per month SIP in the last 1 year, they might have invested 1,20,000 rupees, and that is worth right now 1,32,765 with an XIRR rate of 21.66%. On the extreme right in the table, we have given the CAGR return of the benchmark Nifty Midcap 150. The index has given 12.16%, whereas this fund has given 21.66%. If one had invested 10,000 rupees per month in the last 3 years, total investment amount is 3,60,000. That is worth right now 4,61,859 with an XIRR of 17.23%. The same goes, if you had invested 10,000 in the last 10 years, your investment amount would have been 12 lakhs. That is worth 30,45,000 and odd with the XIRR of 17.82% and with the profit of 18,45,572. 20 years horizon, SIP of 10,000, total investment amount 24 lakhs. It is worth right now 1,78,76,372. This is the magic of compounding and long-term investing, that too in a high-risk fund. So it has given an XIRR of 17.43% versus index return of 17.29%. And since inception, if one had invested 10,000 per month, so total investments 26,20,000, it is worth right now 2,40,29,107 rupees. So a phenomenal return in any consideration. So this is as I said, this is the magic of long-term investments. Okay, we have seen SIP returns. How about bulk returns? I cannot do 10,000 rupees per month forever. Tell me about one-time returns. So if one had invested 1 lakh rupees a year ago, it is worth right now 1,35,231 with the XIRR of 14.83%. So profit is about 35,231 rupees. At the same time, benchmark has given 3.79%. If one had invested 1 lakh rupees 5 years ago, it is worth 2,24,447 rupees with an XIRR or CAGR, whichever way, 17.55%. If one had invested 1 lakh 20 years ago, it is worth 23,92,115 and the CAGR return is 17.19%. Since inception, when the fund was started on August 9, 2004, if one had invested 1 lakh rupees, it is worth right now 44,82,824 times. which is like more than 44 times or closer to 45 times. 18.86% phenomenal return, and in the last 20-22 years in the Indian economy and the fund both have given wonderful returns. Okay, now how about the top 5 sectors in this fund? Financials, industrials, consumer discretionary, healthcare and technology. So in financials, the fund manager is overweight. In industrials, the fund manager is overweight. In consumer discretionary, the fund manager is overweight, and healthcare equal weight, and technology underweight. So you can see the active share of the portfolio is much higher in this fund. How about the top 10 stocks? It is given in front of you. In none of the stocks the fund manager holds more than 5%. FSN e-commerce, Federal Bank, GE Vernova, Lenskart, PB Fintech, all high growth, high PE companies you can see here. Then portfolio aggregates. In large cap, the fund manager holds 15%, and in mid cap 62%, and in small cap 22%. As per the nomenclature, the fund should hold minimum 65% in mid cap. Maybe the fund manager might have bought 65% and higher. Some of them might have become large cap, some of them would have become small cap. Either way, it is possible. So that's why you are seeing 62% here. And finally, the suitability of the fund. Who all can invest, who all should not invest. Investors who have experience in mutual funds, who can digest volatility, who are looking for high return with high risk, who can wait at least more than 7 years, those who will not get tensed because of volatility, youngsters, and those who are looking for wealth creation opportunities. All these people can consider investing in this fund. Who should not consider investing in this fund? Conservative investors who are afraid of volatility, who are looking for guaranteed returns, and those who do not have prior experience in mutual fund investments, is better they avoid this fund. Having said that, this is a fun fact series. So we have given all the facts here. For your suitability, please talk to your financial advisor and take an opinion from him or her. Thank you. Thanks for watching. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.